We're 3 hours into trading. It is Friday, July 30th, the last trading day of the month. Hello, traders. Let's keep this pretty quick today. We've got a market decline. S&P futures have been down as much as 30 points so far today. Yesterday's pick, we're going to start off there. Certainly, it must be down because it was a bullish pick. Not so fast. Tesla was yesterday's bullish pick of the day. Look at this stock go, making higher lows through the prior day's high. Even with the market down, this stock wants to go higher. Let's take a look at the daily chart. You can see downward sloping trend line, upward sloping trend line. This is a wedge formation broken to the upside on heavy volume above the major moving averages. Relative strength. All the ingredients that we look for. This is how we do it each and every day. There's a systematic approach. It can be learned, taught it to many people in the trading room. That is why you see the vast majority of these picks work out. So let's go into the market and see what it's doing. I'm going to make a bold prediction. The bold prediction is that this high of the day, it's here to stay. This low of the day is probably going to fail, and I believe it could fail pretty soon. You can see the 10P indicator moving higher and higher. What has the market done since this cross? It's basically flat to a little bit lower. I believe this is a bearish divergence setting up. I believe that this bearish cross that's coming up, you'll see the upward sloping trend line here breached, and then we're going to test the low. I believe that we're going to take out the low of the day. If you're watching this video Friday night, Saturday, Sunday, take a look at what the market did from this point forward after 3 hours of trading on Friday, and then ask yourself, how the heck did he know this was going to happen? So here are some of the tells. You know that every day we have key bars. These are key bars, long green candles stacked. That is a very powerful formation. This typically signals a gap reversal. Well, we didn't get all the way up here, and we already started to see warning signs in the 10P indicator. So right about in here, it's telling you, uh-oh, you better watch out because there could be some danger ahead. So we get a couple of more green bars and then this massive red candle. This is a bearish engulfing candle, and it tells us that there is heavy selling pressure. Now, how in the heck could I know that? How could I possibly know that there's heavy selling pressure that early in the day off of that particular candle? Well, if there were buyers, they would be layered up. Excuse me. Sorry about that. They would be layered up here, and you would have buy, 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 buy. These orders would be layered because they aggressively want to get long. They want to buy any little dip in here on the notion that we're going to continue to go higher and fill in this gap. So for a sell program to be able to come in and strip out all of those bids all the way down would be incredible, especially if they were large bids. But that didn't happen. Wham! Stripped them all out instantly. Tells you that that sell was very big in size. And it also tells you that the buyers may not have had big bids out there. And that's why they were easy to clear out. When you get a long red candle like that, and then we get follow through selling in here, that tells you that they're still looking to get short. But wait a minute, Pete. We got this long green candle here. That certainly got to tell you that there are buyers. Yes, there are buyers. We know that actually from these 4 bars here. These are stacked green candles. Very strong buying here early in the day. Now, after that red candle, though, I believe the buyers are going to be more passive because they've seen that sellers have a pretty decent hand and some pretty decent conviction. A one-off green bar like this is nothing. You can see the next bar, bearish hammer, and then we take away half of this long green candle right here on that red bar right there. That's a warning sign telling me that this is just one green candle. This is nothing. So going to be a little bit choppy today. We can see we've got a lot of buying, got a lot of selling, and then we've got mixed candles in between. I do still believe, though, that the selling pressure is more pronounced than the buying pressure. This should not come to you as any surprise. You know that I've been mentioning this to you, and we're going to take a look at the daily chart. I've been mentioning to you that once the big five tech companies announce, and now we've heard from all of them, that the air is going to get let out of the balloon. We had Amazon was the final. All of them, Apple, Amazon, Facebook, Google, Microsoft, all five of those stocks, they comprise 20% of the S&P 500. All five of them are down from the earnings announcement. But wait, Pete, the earnings announcements were great, fantastic numbers. Yes, they were exceptional, but that was already priced into the market. And that's why we got this big rally here. It's already pricing in excellent results. Now that the news is out, buy the news, buy the rumors, sell the news. So they bought in advance of the numbers. Now we could see a little bit of a letdown. I'll also say that I believe that those big five tech companies were less impacted by labor shortages, supply disruptions, and higher raw material costs than the rest of the S&P 500. And I think the back half of earnings season gets a little squishy. We'll see if they're going to be able to pass those costs on to consumers. A couple more notes on the market. You know, there are also some red flags. I've been mentioning FXI. That's China's market. Yesterday it looked like there might be a capitulation low, still could be in place, but not able to continue and follow through. Usually on those capitulations, you'll get a green candle like that, and then another candle stacked and another candle stacked. That's when you know it's a real deal. This one, still not quite following through. So we're going to have to watch that market very, very carefully. We have Congress going into recess. We have the FOMC done until September. We've got some pretty major economic news next week. We got ISM manufacturing, ISM services, we got ADP, we got the unemployment report. After that news goes through the market, and earnings season will also climax next week. Once that news goes through, from August 7th through August 30th, it's going to get really, really quiet. It does every year. Volumes are going to drop off, traders are going to take time off, and things are going to get very, very slow. So watch for that. If you're a longer term swing trader, this is a low probability trading environment. You should be sidelined. If you're a nimble trader, trim your size, trim your trade count. So let's take a look and see what the market's doing right now. We know that we've got a little bit of a bounce taking place here. 1OP is still rising. It has not had a bearish cross yet. So until it does, we're not even going to consider shorting. I'm just going to keep an eye on it. So I'm going to go into the charts. And today, I'm actually going to look on the bearish side. I think the market's going to have a difficult time rallying in the next week or so. We do have potential end of month, beginning of the month buying that might boost the market a little bit Monday when we come back, but I want to take a look and see if I can find a decent short in here. So I'm going through my heavy selling list. This is a scan on Option Stalker, and take a look at Amazon. You can see it's resting on that 100-day moving average. Big drop down today, so it's weighing on the market, but the market is not down because of Amazon. The market is down for a variety of reasons. You can blame Microsoft, Facebook, Apple, all the rest just as easily because those stocks are also trading lower. You can also blame China because China is still ratcheting up their regulations on tech companies. Their market was down. Overseas markets were very, very soft. So I could go through the list here and show you all the different stocks. PayPal, I actually think, sets up well for a decent short here. Upward sloping trend line, breach to the downside. You can see it was able to take out the 50-day moving average today. It's got room down to the 100-day. So very weak price action there. But it is not the short that I want to focus on. I'm going to go right down to XOM. Sorry, I've got to keep this video a little bit shorter than normal. But there is your flagpole. There is your nice upward sloping trend line that's been breached to the downside. This is what we call a bear flag formation. So you can see how the stock had fallen and then it was trying to grind its way back to that 100-day moving average. B means earnings before the open. So earnings came out this morning and you can see how that 100-day moving average rejected XOM. And now the stock is on its low of the day. Let's zoom in on that. That is a big sign for us. Now, XOM's not a big mover. You can see in the last half an hour, market up, up, up. Stock not able to get off the deck. This is weak. And I believe if I looked at the entire energy sector, I think I'm going to be seeing similar price action. In fact, as I go down the list, I'll see CVX here as well. Earnings before the open, negative reaction. It at least is bouncing. So it looks stronger than XOM does right now. And there you would have an upward sloping trend line like that. I might as well draw it because that's something that I might lean on in the next few days. Let's click there. Let's click there. XOM, that's the stock we're going to be focusing on. I like selling an out of the money bearish call spread keying off of that 100-day moving average. I think you're going to continue to see weakness in this stock. Could you buy some put options on it? Not until we get this market breakdown. The other thing is that on the short side, you've got to be super, super careful. We are in a 1.5-year bull market. We are in a 12-year bull market. It's been very difficult to short. I think XOM will set up as a better short if this upward sloping trend line right here is violated. We get that bearish 1OP cross. Then I think you can short the stock. As the market rolls over, you're going to see XOM drop. That's how I would play it, and I would close that trade out by the end of the day because I don't really want to be short stocks right now with the market near its all-time high. I do believe that you're going to see sellers get a little bit more aggressive over the course of the next few weeks. August is traditionally a soft month, so is September. So be careful on the long side. I'm going to leave you with this parting message. Trim your trade count, even if you're a day trader. Trim your trade size, even if you're a day trader. You're going to see herky-jerky price action during the day. Green bars, red bars, green bars, red bars, all over the place. There are times when you could swing for the fence. There are times when you have to be more passive. This is one of those times. If you're a swing trader with a 3 or 4 week time horizon, do absolutely nothing until we test this 50-day moving average. Then you can get aggressive, and then you can put on some bullish put spreads, or you can even buy some call debit spreads if you'd like. Wait a minute, Pete. You told me the market's a little squishy. You told me the market has a chance to go down to the 50-day moving average. Why don't I sell some call spreads? Why don't I buy some puts? Because the market could just as easily go higher on light volume and rally. So that would not be a good strategy. Your only strategy as a longer term swing trader is to wait for that drop. If we don't get it, you do nothing. If we get it, start looking for your strong stocks on the way down, watch for relative strength, wait for that bounce, make sure that that bounce is confirmed. Now you know you've got the market tailwind you need. Find those strong stocks, you can buy those and expect another rally back up. That's how you have to play the market right now. Don't get cute. Don't think you always have to have a trade on. Good time not to do anything. Thanks so much for watching. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.